Hello, I'm Marianne Deveni. Well, the TSX has hit correction territory this week, down 10%, and U.S. markets are not far behind, erasing most of the gains we've seen year to date. Well, to put it all in perspective for us, I'm here with Bruce Cooper, who's Vice Chair of TD Asset Management and incoming CIO, Chief Investment Officer. Good to have you, Bruce.
Great to be here.
Well, let's start off with what's going on. Put this in perspective. What exactly are we seeing out there?
Well, I think the first point I'd like to make is equity market volatility is normal. In the last
We've seen it before.
We've seen it before. In fact, even in the last 5 years, which has been a good time for equity markets, this is now the third correction we've seen in the TSX over that period of 10% or more. I actually looked back in history yesterday. We tend to see one of these every 2 or 3 years. That is kind of normal life in the equity landscape. So you see short-term volatility. We really need to look through that from a longer-term perspective.
So what's going on then? We have global growth slowing. We have concerns of the end of QE. What's important to you?
I think the biggest issue the market is grappling with is the slow growth issue that you talked about. It's interesting. This is something at TD Asset Management we've been focused on really for the last 5 years. Anybody that's seen me speak has heard us talk about we believe in a persistent low growth environment really created by the high amount of debt around the world. Maybe the rest of the market's just wrapping its mind around that, but we do expect that economic growth will be relatively low for a persistent period of time throughout the world. And I think that's really what's causing markets to be a bit unsettled this week.
And then I guess concerned about rising interest rates, and then we have oil prices, which were down significantly as well.
Yeah, I mean, interest rates is an interesting one because just back a couple of weeks, there's a lot of concern that interest rates would rise, thinking about U.S. interest rates at the Federal Reserve. We've been of the view that interest rates would not rise very much for the reason I just mentioned, which is we expect growth is going to be relatively low and that interest rates are going to remain at low levels for a very long period of time. So I think a couple of weeks ago the market was worried about that. I think it's much less worried about that this week because it's focused on global growth concerns. And of course, oil ties into that as well. The reason oil has come down is because consumption growth has been a little bit weak, and that has caused the price of oil to fall dramatically.
And where do you see it going from here? Is it this is our correction, and probably a little bit more volatility before it's over?
Well, we can imagine continued volatility, but I think when things have fallen, you want to think about what can go right and what reasons to be optimistic.
Out the other side.
There are lots of things to be optimistic about, and at the top of that list, I would put the U.S. economy. Remember, still the largest economy in the world. Still ticking along very nicely, and I think it has pretty good momentum. Job growth continues to be strong. We're seeing investment come back. The corporate sector is in great shape. So the U.S. economy is good. Central banks remain accommodative. Interest rates are low, and I think central banks stand ready to bring out new policies if required. And as I said, the corporate sector is in good shape. Earnings are growing. In the second quarter, we saw earnings up 10%. We're starting to see the third quarter come through. Earnings continue to be good. And valuations, which were getting a little rich before the correction, have now come back to a point where we're seeing actually lots of opportunities to buy high-quality stocks at reasonable prices. So, we'd rather be fearful when others are greedy and greedy when others are fearful.
Exactly.
So, it's good at this kind of time to think about what can go right.
All right. Now, what should investors then remember? You mentioned a few things right now, but when you're looking at your portfolio, what kinds of things would you remind people to think about?
I think the most important thing is to focus on the long term. Most of our clients really are saving for their retirement, which in many cases is 15, 20, 30 years down the road. You will experience the kind of volatility we're experiencing today many times, but focus on that long-term goal and set an asset mix that is appropriate for that goal. I think the second thing, really focus on building a balanced portfolio of quality investments. If you have quality investments, they will fall when you get market volatility, but they will recover when the market comes back. And that's been our philosophy, and it has served us very, very well over time. So I think those are the two things I would really focus on, long-term goal, quality asset mix, quality investments that will recover over time.
All right, thank you very much, Bruce.
It's great to be here.
I'm joined by Bruce Cooper, who is incoming Chief Investment Officer at TD Asset Management. Thanks for watching.